Reset is back for 2012. Vince Lanci joins me. Stay tuned. So nice to see you, Vince, in this new year.
Happy and healthy to you too, Daniela.
So Vince, let's start this new year with a resolution. Let's not talk about Europe.
I will break it today, but we'll make the resolution right now. We can start with Iran if you like.
So yes, let's start with Iran. How much of an impact do you believe it's having on the price of gold right now, Vince?
Gold has always benefited from Middle East tensions, and certainly you'd have to put a handicap factor on that of about 20 or 30% for the reason for the rally in gold now. Oil always benefits more for obvious reasons, but gold definitely is being affected by it, especially the fact that it's rallying while the dollar is staying stronger. So yes, there is an effect.
So is this a buying time for gold now, Vince?
Briefly, technically, we feel that we're kind of in the middle of a range now. I don't think it's a bad time to buy as an investor or as a trader. If you're a buyer as an investor, you should also be prepared to buy around 1485. So we wouldn't buy everything here, but if it's good enough for Jim Rogers to buy, it's good enough for us. And he's bullish on commodities every day, but he was looking for a pullback in this area, and lo and behold, we got it. So if it's good enough for him, it's good enough for me. But I would keep some bullets in my gun for another dip. As a trade, we like it. We like to be long it here, looking to sell in between 1630 and 1670.
So staying on the technicals, Vince, let's look at the chart you sent me over today. What should we be looking at?
Between February and June of 2011, you saw a traditional gold relationship, an inverse relationship with the dollar. Dollar goes up, gold goes down. Dollar goes down, gold goes up. What you saw during that time frame was a war between people worried about inflation as a result of QE2 and those people worried about global depression or recession. So you had gyrations in the markets as a result. And that's normal behavior for extreme reasons, but normal behavior for gold. The next section between June 11 and December 11, that's the Goldilocks era for gold investors. Basically, that's when Europe became front page news every day, and you saw the dollar go up and gold go up. This was when European money was putting some of its safe money in the dollar and some of it in gold. So you had a competitive nature there. Then that relationship broke down again in December in a horrible way. And that relationship in December was the anti-Goldilocks for gold investors. The dollar would go up. It's not really shown clearly on this chart. Dollar would go up, gold would go down. Dollar would go down, gold would go down. And what that was is, we believe that was end of the year fund managers that were down a lot of money, liquidating positions to raise cash for redemptions. We believe it was European banks, as we said before, selling anything that wasn't tied down to raise dollars. The good news is we're in January now. That calendar event is over. And now you're seeing a resumption of gold moving positively with the dollar. So it's Iran, it's Europe on the front page again. So when you start to see this relationship, it's very encouraging. The question is this the aberration or is this the norm now? So anybody who tells you that they know the answer to that doesn't really know what they're talking about. But these are the facts. Use them as you will.
All right, final thoughts for investors for the remainder of the week, Vince.
For the remainder of the week, we'd be flat positions as traders here with a slight bias towards being long to buy dips. We're starting to like silver as an investment. We are disappointed that platinum hasn't been dragged along in this rally, and that gives us pause for deflationary concerns. So we're just going to keep our eyes on the Middle East and just be careful right now. It's early in the year. You don't know what's going to happen.
All right, and just quickly, Vince, why are you paying attention to silver now?
Silver is a lot further off its highs than gold is. And we think once this starts getting going again, you're either going to have economic recovery and inflation, which silver is partially an industrial metal, or you're going to have European collapse and depression over there. The bottom line is, on a relative value, we think silver is undervalued to gold, and it would be something to step in and buy in this area.
All right, Vince, thanks so much. We'll see you next week.
Thank you. You too.
And thank you for watching. You can email me, as always, at newsfeedback@kitco.com. For Kitco News, I'm Daniela Camboni.